Welcome back, everyone, to the 2025 Government and Public Sector Virtual Conference. We are in the home stretch. 2 more 50-minute sessions, and we will have worked through the 2-day 8-session conference. So we greatly appreciate you continuing to be with us as we give you the latest and greatest in terms of updates, best practices, and strategies for your entity. This session is going to be called Closing with Confidence, Year-End Best Practices Unlocked. It is a 50-minute session, and I will be presenting along with Lauren Strope. I'll introduce myself first. It was just on the last session, the GASB update, but for those of you all who are not on that session, my name is Danny Martinez, a partner here at Cherry Bekaert, and I lead our Government Public Sector Accounting Advisory Group. It is a separate group apart from the audit group, and all we do all year round is help with things like ACFR writing, financial statement close, implementation of new accounting standards, improvement of efficiencies and processes. And so it's really a lot of the things that come from what we're talking about today are things that our group assists and leverages and co-sources. So happy to be presenting with you all today. I'll turn it over to Lauren to introduce herself.
Hi, everybody. My name is Lauren Strope, and I am a partner in our audit practice. I have been working with local governments for the entirety of my career and a really proud member of our firm's GPS team. I love working with ACFR so much that I am a GFOA volunteer reviewer. But really, I'm really excited to be here and share my experience to hopefully give you some great tips so that you have a financial statement close that is just awesome this year.
Thank you, Lauren. And so in going over the agenda, 3 pieces that we're going to touch on. We are going to start with current close challenges, and that's just going to be a quick reminder, update, commiseration of where we are and where you all are within your governments. And some of your challenges will be the same, some may be unique to your specific government, but we can all agree that is definitely some challenges out there that you all are facing as you go about your day-to-day accounting financial reporting. Those of you all that are 630s, of which about 3/4 of you were in the GASB update, kind of going through your financial close this year for fiscal year 25. So we'll touch on some of those challenges. Secondly, this is going to be the bulk of the presentation. We'll talk about how to close with confidence. And within this section, we have 7 items that we've identified and laid out as really core and key to having a close that instills confidence in not only you, but in your team. The last portion of the presentation will be focused on the final product, and that will be focused on the ACFR. So we'll talk specifically about your annual comprehensive financial report, what some of the challenges are by section, as well as what some tips are to help make that not the easiest process ever, right? Those are big books that we're putting together every year, but maybe a little bit easier, a little bit more modern, a little bit more streamlined. We'll be taking questions throughout the presentation. So you all have the Q&A chat. You're probably pretty familiar with it by now. During the polling questions, we'll be answering, and we'll be kind of monitoring them as we go along if it ties into our material, as this is a 50-minute session. If we don't get to your question, or maybe it's a little bit too specific to your circumstance, still submit it, and we will respond to you, once we get the webinar results and get back to you. Either Lauren or I will get back to you. Perfect. I will go ahead and kick us off with the current close challenges. As a partner leading our National Government Public Sector Accounting Advisory Group, I have many calls with directors of finance, CFOs, controllers, sometimes city managers, assistant city managers. And where we talk about is, I'm struggling. I need some help. I need to strategize. I need to figure out how I can be more efficient, because this day-to-day workload that I have, I'm working nights, I'm working weekends, I'm still behind. I need to get to the root cause of the challenge. And really, when that happens, yes, I see the crying face emoji. Those do come up from time to time when we're on those calls. It's one of these 5 things. One of these 5 things is typically the root driver of why we're stepping in to see, okay, let's take a step back. Let's see how we can help. Let's see how we can help you move from that urgent quadrant of everything is important, everything is a fire drill, to being able to focus more on the strategy component of your jobs. The first one is staffing turnover and shortages. This is when you have you have different job positions that you just can't fill with the government accounting expertise that you're looking for. Say you had the controller that had been there really strong 20, 25 years, they left. You brought in someone, say you couldn't find the right fit. So you brought in a temporary worker, and that temp solution just didn't work out because they didn't speak government accounting. You found someone that was maybe a little more ambitious, but had a corporate background. You brought them in, they weren't able to do it. And then as you are struggling with that, your reporting manager also quits, right? And so it's just that snowball effect for, okay, at this point, I'm struggling. I can't, I can't find anybody. I did an interview with Bond Buyer magazine, and that's one of the things I was talking about. The only place that you all can find qualified people usually is from taking from your neighbor city, your neighbor county, your neighbor school district, and that cannibalism just kind of isn't really healthy for the government accounting, financial reporting as a whole. Another thing you're facing, Emily Brock did an amazing job in our first session of the conference about changes in federal policy, the changing federal and state landscape. Big picture, it's all falling down to you, right? It's starting to come down from the federal level down to the state levels. A lot more state responsibility. Emily touched on what's going on with FEMA, Department of Education, and this streamlining of the federal government. Well, it does help a little bit in the sense that regulations are being loosened. The responsibilities are also falling to a lot more to state and local governments. So navigating that and the constant changes with those, like what is the rule today? What's the rule next week? When is it in effect? All those types of things. We spent an hour and a half this earlier this session on the GASB pronouncements, but they take time. And if you don't have a person responsible for your financial reporting or technical manager within your government, that turns out to be another thing that you all have to do in that quote unquote other duties as assigned bucket that just tends to grow and grow and grow. But that is also another current challenge, and when we definitely acknowledge that. Aging financial technology or systems, it's a big driver of us needing to help. When you can't get the reporting into and out of your system in a manner that makes sense, it all falls apart. You have workarounds, right? The Treasury Department uses this spreadsheet, and then we take it, and then someone from our department keys in these things, and it's so difficult to prevent manual error whenever you're doing that. We're working with some clients currently that still have like the green bar, 1980s, 1990s accounting system, and convincing those charged with governance to invest in these technologies can sometimes be difficult, especially if you have 3 or 5 people that are kind of making those decisions. So having to figure out how to best utilize the technology you have is important, while you then put your best case forward in terms of updating your financial system. And lastly, inefficient and decentralized financial processes. Just like with the ACFR, where we talk about things just build and build and build, and we're really good at adding things. Here's a new thing that we're going to lump on top. Here's a new thing we're going to lump on top. It's a lot harder to pull things back or to take things away. And the same goes with financial processes. If you've always had them decentralized, it's really hard to pull that power back from, say, a police department or utilities in an effort to centralize your financial reporting, to make sure you're using the same systems across, and those challenges can then lead to inefficient, decentralized financial processes. So, a lot of this is things that you're dealing with that I'm sure you've struggled with and thought about. So that the next portion of this is we're going to give you some tips, given, kind of meeting you where you are in terms of where you can maybe improve and increase the confidence of not only yourself as a leader, but also your financial reporting team. So our first polling question: which of the current challenges is most prevalent in your organization? Is it staffing turnover and shortages, changing in the federal and state landscape, new GASB pronouncements, aging financial system technology, or inefficient and decentralized financial processes? I promise you, we were not sharing these reports with your supervisor. Feel free to answer anonymously. We're just trying to get a sense of where our audience is so we can tailor the rest of our presentation to meet your needs. Staffing turnover and shortages at 45%, not surprising. And it looks like the other four are not a martini glass. The other four are right there at the 15% each level. Again, also very significant. But the people and the seats that know what you know how to do is definitely a big challenge that we see nationwide when we work with governments. With that, let's go ahead and get to a little bit more positive note. How can we close with confidence? So we went through, we did some research. We obviously, GFOA has some stuff around rethinking financial reporting. We talked to our clients, both the ones who are struggling and the ones who are high performing. And we said, and we started to look to see what are characteristics that we're seeing in the good whenever you're getting those financial statements out in the 90 days, 100 days, where you're beating the average in terms of issuance. What are those high performing characteristics? And we did identified 7. It's going to be counting down 7 to 1, not necessarily for any type of one being more important to the other, depending on where you are. 7 may be more important, 4 may be more important. But people like lists that count down to a number 1. So we put that together to kind of keep your attention. I'm going to turn it over to Lauren to cover the first 2 tips for closing with confidence.
Thanks, Danny. Okay, coming in at number 7 is really having a year-round mentality. So instead of just thinking of your close as something that happens every year end, think of it more as a continuous process. You can kind of break it up with monthly and quarterly reconciliations. And yes, I completely agree with you. There are a couple items like pension and OPEB liability adjustments that you're only going to get annually. But let's think of things like capital assets, for instance. We see a lot of issues where the folks that are doing the work, like the project managers, are not letting finance know on a timely basis, hey, this isn't CIP anymore, we've actually capitalized this. If you try to get that information annually, it can really be a pain, right? To get it out of them. They might not realize how important it is for you to draft the financial statements. But if you're getting it monthly or quarterly, you get folks on a routine of giving that information to you so that you get what you need in order to create the financial statements. In addition, things like the CFA. So you might have a lot of grant managers out there who, while they're doing great in the programmatic and running the program itself, may not see how it impacts the financial statements and how you have to reconcile those expenditures to the GL and things like that. And again, getting them more on that cadence of monthly or quarterly reconciliations as opposed to annual will really help you when it comes to year end. Make sure that you have interim reviews set up to catch errors. Remember, if an external auditor finds it, it's an audit adjustment. But if you find it, it's that your internal control working properly. So just make sure that you have those set up and in place. Moving on to number 6. Speaking of internal controls, really having strong internal controls and documentation. Danny knows this is kind of my soapbox, so I'm glad he gave me this slide. But you really want to have well-documented accounting policies and procedures. I kid around with folks all the time that think of yourself like a teenage girl with social media. You want to document everything that you do. Your controls really should be documented to the point that if a team member is not available, folks can easily figure out what it was that team member did in the process and what they need to do. That you have issues with staffing. We just went over that in the previous poll, and having those well-documented procedures will ensure that when folks are coming in to help, that they can hit the ground running. For significant unusual transactions and significant estimates, you want to make sure that you've documented kind of the thought process there, how you came up with this information. And you want to make sure that you develop a process that can be followed and really has been approved. This will ensure consistency and compliance with your policies. And really, who amongst us doesn't like compliance with policy, right? We're accountants, we love that. Make sure that you have checklists for all your financial statement sections, i.e. if you have somebody working on creating footnote 5, for instance, where do they get this information? What reports do they need to utilize in order to do that? And then finally, what I wanted to mention on this slide was ensure that you include new standards and have a process to build that in each year. You kind of heard from Scott and Danny just earlier on the GASB update that I don't think the GASB is slowing down at all. So make sure that each year someone is thinking to themselves, what new GASBs apply and what do we need to do, and ensure that that's kind of part of your checklist. I'll kick it back over to Danny for number 5.
Perfect. Before I jump into number 5, just to share one last thing on this one with that how often is something that you're doing different than what it says that you needed to be done. I'll tell you that in working through these GASB 101 implementations, and we go through the policy for compensated absences for governments, and there's just some stuff that's missing. And it's like, oh yeah, no, we pay this out for these people because of this, and these people because of this. And then we ask why, because we don't see it in the policy. And it's just like something that's just been known. Oh, we always did that here. I don't know. I've been here since 2010. It's how we've always done it. And so if you think about these staffing challenges and shortages, you're putting people in seats that they haven't been in before. And so as much as you can do, like Lauren said, of, oh, note 5, you pull from this report, you pull from this thing, as much as you can do to have a clear memorialized process, the better off that you will be. Specific to the financial statement close, number 5, the centralized close calendar and communication. One of the, I'd say, 4 main things that we do in our accounting advisory group is help with year-end close. So from whenever post everything for say junior end, post everything for June, how do I get to that final trial balance that is ready for audit? And the first thing that we do within the first or second meeting is we ask, how do you do it now? What is the schedule with all of the responsibilities that you have, with deadlines that you work with, that you work through? Some people have them and they're like, oh yeah, I have that file. I mean, we don't use it and we don't stick to the timelines because, you know, there's only 3 of us from the 7 that used to be here whenever we built this thing, but they'll have something. Sometimes they won't have anything. And so the first thing that you'll want to build if you don't have one is a calendar that is in a shared place, right? We all have places like share file type SharePoint things where we can share, that has each financial reporting area, when it's due, who's doing it, both from the preparer and the reviewer, and then thinking about when you set those dates, the dependencies. So if you can't do a certain thing before, you know, someone in the other department sends you the information, that all makes sense. And what that does is it helps to make an accountability tool, right? It's up there. It's on the whiteboard. You go in every day. You see, this is what we've promised. This is what we've agreed to. Of course, in the front end, you get that buy-in, but you want to have that laid out. What that'll do is it'll help assign responsibilities, have people know when they need to complete things, but it also helps identify gaps. You build it, you know, the auditors are coming, you know, the 3rd week of September, and you're like, there's no way. I now that it's laid out, I have some gaps. And within those gaps are the ways that firms such as ourselves can fill in and help to co-source and help to do it. But you don't even know if you can meet that deadline until you kind of build it out and lay it all out, like you see these people here on the picture. You want to have hold an internal closed kickoff meeting. So, all right, guys, it's here again. I know we just closed the audit and issued, and there was that other audit from FEMA, and there was this other audit from the OIG's office, but it's time. Let's go over it. Let's agree responsibilities. Let's have weekly accountability meetings to make sure that we're keeping up to date on the areas of progress. People love Zoom, Teams. We really, really encourage in-person meetings for this. There's something about being in the room that elevates the accountability. If it's virtual, requiring people to be on screen, I know that we do within our group, to screen share, because it's easy to say, oh yeah, it's going well, versus let me pull up and show you where I'm at with my compensated absence checklist. This is where I am, and kind of that weekly accountability, especially if you are in charge of any specific area where you have people reporting up to you to get you get you items, highly encourage you to think about utilizing this. Someone in the chat said communication is very important and very key. And I would say that this is this tool, this calendar, again, we all have best intentions, but putting something up and putting that on the screen and making everyone accountable is a really impactful way to help strengthen your close. Number 4, leveraging technology and automation. I would say if I was doing this presentation pre-COVID, maybe in 2020, even I sat on the other side. I sat on your fence a lot for technology presentations, and I was like, these guys are just trying to sell me something. I'm not really into it. I'm just going to roll with what I have. I would say the last 18 months, the technological improvement of what is out there to make your lives easier has gotten a lot better. But secondly, and probably most importantly, it's gotten cheaper. And I'm not talking about the huge ERPs. Yes, that is a thing that you all want to consider. But I'm talking about just third-party pieces to automate journal entries, reconciliations, reporting. A lot of you probably already bought the thing. And you bought the accounting system. You just haven't turned on those features. The 50% of you all that said you're dealing with staffing issues, I know it's not the most fun to be like, all right, I guess I'm going to have to automate this thing. But if you're not getting help on the way, if you're not seeing those qualified applicants, if you don't have the budget for it, probably a way to go. Probably time to just be like, okay, it's time to accept it. It's time to let me dip my toe into seeing what I can do here in terms of leveraging technology. The ERP systems themselves are really good. They've gotten a lot better, allowing for real-time data access, remote collaboration. You're seeing a lot more players jump into the government space, which is great. There's software providers that kind of just dabbled, touched on it. You go and do one of those sales presentations. They say, oh yeah, we do it for government, but then they can't show you anything that they do for government. Some of those providers actually now can do things for government, especially if you're higher ed, where you're just like a proprietary fund. But if you've done a demo and you haven't done one in 18, 24 months, maybe sit down and listen again and see what they've added to the process. We'll touch on ACFR writing the second half of the presentation, but it really has come to the 21st century in the last couple of years. There wasn't really much out there in terms of ACFR writing and reporting, but now the ERP systems themselves have some pretty good financial reporting models. A lot of work the first year, but you can get it there. They'll help you all, even with the government-wide entries. ACFR writing software, we partner with that entity, Gravity, that does ACFR writing. Another way to help streamline your ACFR reporting, but we'll share more about that later when we speak specifically on ACFRs. But I would say I'm as skeptical as anybody when it comes to just buy a technology to fix something. I would say at least dip the toe in. It's probably time if you're facing these challenges. This one is also me, because I've only talked about governmental accounting standards and GASB reporting for 90 minutes. So why not a couple more? Let's talk about timely implementation. We did that training this morning. It's like, hey, we need great job, all 1,000 of you all that attended. You did a good job. This first one, monitoring the GASB updates. Perfect job. We tried to do our best to make sure that you're on top of things. The next piece is up to you, planning implementation. I talked about that implementation calendar at the end of it. You want to assign an implementation team to keep track of all of the ones that are coming down the line. And then when you have something that you have to implement, please don't go it yourself. With GASB 96 subscription-based IT arrangements, you had to bring your IT director in. There was just no way to get around it without bringing them in to fully understand. With GASB 101, HR and payroll plays a significant part. So make sure that you assign that implementation team and you bring them in and get them in on the front end, on the learning end of the accounting standards. Please, 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 please don't wait until auditors show up and ask/tell you what to do. We have we have these calls sometimes. I'm sure Lauren has it whenever she transitions from another auditing firm. Like she'll say, well, doesn't the auditor just tell us what the journal entry is? Can't they just tell me how to do it? And yes, under accounting standards, we can do certain things as non-attest services. If you give us source records, right, some accounting and financial reporting help, that then you as management have to take responsibility for and feel good about. But that's different if you're proactively planning to co-source that rather than just being like, implementation is part of what I pay the auditor, right? That's not what you're looking for if you're looking for a quality audit that has has independence. So keep that in mind. I'll share one more tip about the ideas around how to stay on top of the new accounting standards. But again, that checklist of tracking responsibility really works well here as well. Lauren, want to talk about efficient audit coordination?
Of course, this goes to the auditor. I think that the huge thing on this slide is just communication, communication, communication. So Danny covered in number 5, kind of setting that calendar. Include your auditor in on these conversations too, and then have them build out their schedule based on when you can provide the information. When I work with my clients, we say, hey, here's the deadline, here's the absolute drop date, and we work back from that. And set up, okay, here's when I'm going to do this task based on when you provide the information for me to get to that task. So just make sure that you're setting firm deadlines and you're following them. Hold everyone accountable. I think technology is wonderful and allows us to have easy weekly status updates that can be very quick. Hopefully they're just, yep, we're on track. But if there are any delays, it'll allow for both parties to kind of regroup and figure out what needs to be done. As you all know, audits are very, very big tasks for both sides. So just ensuring that any sort of delays can be resolved quickly. Make sure that you have a process for reviewing items that are provided to the auditor for those PBC documents. If they don't tie, if they don't agree to the GL, I promise we're just going to come back and keep asking for more. So having a way of reviewing that information before is provided to really help to make sure, hey, I did provide you on this on this date. And then plan to issue a little bit before you need to, work around holidays, plan and communicate. Just because you have a particular date that you want to submit to the GFOA, for instance, you really want to be done a little bit before then. That way you can get the actual report together and get any sort of administrative tasks buttoned up. And then I'll kick it over to Danny for our last step.
Thank you. I'm probably going to say on this slide real quick and just say something that Lauren can't say as strongly as maybe I can since I'm on the advisory side. Please don't pick your auditor just based off of cost. You really want expertise. You guys know, you're in the seats. You know that governmental accounting in itself is different. You know that the mission and purpose of your organization is different. There are firms such as Cherry Bekaert, not the only one, but there are firms such as Cherry Bekaert who dedicate themselves to being on top of all of these things. If you're short-staffed, the last thing you want to be doing the week before Thanksgiving when you're trying to get your audit out is explaining to the staff auditor what a component unit is. So just keeping that in mind. And in terms of aiming a deadline well before statutory date, from Dallas, Texas, our state of Texas, actually passed a House bill. It was a Senate bill, either House bill or Senate bill this year, requiring timely audits and building a little bit of a stick, saying that there's potential to not be able to raise their property tax rate if they have a late audit. So there's no time more important than now, especially in the state of Texas, to make sure you're aiming well before that statutory required date. With all of this dose moving from federal to state government and this focus on efficiency, effectiveness, timeliness, I wouldn't be surprised if Texas isn't the only state. There is like 7 or 8 states that are trying to build a stick in to statutory reporting audit dates. And so just keeping that in mind as well. Number 1, and I did say that these are made of borders, but if it were me, this really would be my number 1, having a culture of accountability and excellence. We have a lot of very distinguished accounting and financial reporting people on the call, and I'm sure throughout your careers you've seen the ebb and flow of the commitment, the consistency, the buy-in of your accounting and financial reporting team. And I would just encourage you all, even if you get frustrated in this low staffing availability environment, just to hold that bar high. To let's give you a little bit of a behind the curtain of my group, the accounting advisory group within Cherry Bekaert that does government public sector, that I lead, I tell them that three things are really non-negotiable to be a part of the group. And the first is quality of deliverable. So the work that you're doing is of an excellent quality, because obviously no one needs to hire us, right? So the excellence of the quality is one thing. Second is accountability. And when I say accountability, yes, we owe our clients accountability. You owe your auditors accountability, but also you owe each other accountability. So what if I promise someone from another department that I'm going to have this report by this certain date, it just has to get there, right? Once we meet and we make those commitments, and there's no external factor that comes in. Yes, I get it, life happens. But if there's no external event, we just have to stick to our word to meet that certain requirement, deadline, deliverable. And third is drive, passion, however you want to put it, but really caring about the mission of what you all are doing. The reason that I am in government and public sector, and I've stayed in it my whole career, is because what you all do matters to our communities, right? I'm sitting here, I live in between Dallas and Plano, Texas, and I see what the cities are doing and the impact that they're having around my kids and the extracurriculars they can do in their schools and all those things. And so you all are in a great position to push that mission and purpose. And so I encourage you all, as you're doing the hiring and you're doing the interviews, leaning into that and leaning into not shying away from this accountability, excellence, and mission, because that's what makes you all great and unique from other industries. Last thing to point out on this one, a pro tip. I shared a little bit earlier how Scott and I presented at a bunch of conferences. What you all may not know is that we at Cherry Bekaert provide virtual or on-location training for a variety of closed areas. So if there are gaps that you have, and you're like, I just don't have anyone or the time to build a training on pension or to build a training on OPEB, or to build how to do government-wide conversion entries. I have 2 senior managers that are flying out to Florida next week to teach a municipality for a couple of days on the entire closing process. So just keep in mind that we're here to help. Pretty not that cost prohibitive, I'm gonna be honest with you. So just keep that in mind as you're building, if you do have a budget, or build it out in fiscal year 26 for a training calendar. Polling question number 2. How long does it take your government to issue financial statements? Under 90 days, 90 to 100 days, 121 to 180 days, or over 180 days? I believe the average has creeped up in the last decade from like 104 to 115 or something like that, which is scary because a lot of people have 120 as the statutory date. The under 90 days people are like marathon runners. How do you spot them? Don't worry, they'll tell you. If you have someone that finishes and issues under 90 days, they will more than happy to let you know any chance that they get. And it's great because they are following some of those principles that we talked about. So let's give you all a minute there. 90 to 120 is about half of you all. 120 to 180, hopefully some of these ideas were helpful. Greatly appreciate you all answering. Congratulations to the 14% that are under 90 days. That is awesome. All right, so the last portion of our presentation is going to be on the final product. So I'll turn it back over to Lauren.
Sure. So my portion of the presentation is going to cover ACFR common errors and solutions. I mentioned I am a GFOA reviewer, so a lot of this is coming directly from the GFOA and the types of things that they saw in the last sections. So just some topics. We're going to go over what's actually included in the ACFR very quickly, the common issues that are found in each section, and then some solutions. So if you flip over to the next slide, Danny. Just for any of you that don't know, because I hate in presentations where folks use acronyms and I don't know what the heck they're talking about. It's the annual comprehensive financial report. It's what meets the GFOA rules for the certificate in excellence in financial reporting. And it's really kind of the gold standard of financial reporting. If you're not issuing an ACFR, please still listen, because everything that's in this financial section is still going to apply to you. All right, next slide. So in that introductory section, just some challenges that the GFOA has seen throughout the last couple of years is the date on the transmittal letter. So everything related to the introductory section is actually on this transmittal letter. So remember that the date of it needs to be on or after the auditor report date. You want to make sure that it's addressed to the government citizens. What they found is with a lot of special purpose districts where maybe the focus is not just on all citizenry of an area, but a specific amount of the citizenry, it was not addressed appropriately. I think the big challenge for all of you that are preparing is the amount of information that's in the transmittal letter that comes from non-financial folks. So for instance, you might have someone write in the intro letter that, hey, we've received 100 million in funding related to this program. And while that's true, in the current year, maybe you only received 27 million. So you want to make sure that it's really structured for the year that you're reporting. All right, so I promised for those of you that weren't issuing an ACFR that there would still be things that are applicable to you, and that would be the financial section challenges. What we're seeing is a lot more and more comments on the MD&A related to not explaining the why. So not explaining why sales tax revenue went up or down, for instance, simply stating that it did and by whatever percentage. So make sure that you are including that why. Keep in mind that the transmittal and the MD&A are different and they really do have a different focus. So you want to make sure that the folks preparing the transmittal letter kind of stick to their lane in terms of things that they should disclose. And same with the folks that are doing the MD&A. If you're ever confused, you can look at the GFOA checklist and that'll give you a lot of what types of information it should be in either or. Another thing that they've seen a lot is for major funds, not providing analysis of a variance between original and final budget amounts, specifically if there are large variances there. So make sure you include that. On the financial statements themselves, some of the common things that they're seeing are folks reporting restricted net assets with no restricted net position. So make sure, unless you have offsetting restricted liabilities, you should have restricted net position if you have restricted assets. Really just making sure that amounts throughout the statements agree to each other. So think of things like depreciation in a proprietary fund. You'll have it in the income statement. You'll have it in the cash flow. It should tie to the roll forward and the accumulated depreciation increases there. So just making sure that everything really ties back. In the last couple of years, what they've really seen is a lot of line items between the fund financials and the government-wide financials, not really tying correctly back and forth, and really no explanation with that within the reconciliation. Ensuring that your non-spendable fund balance equals the amounts of prepaids or inventory that you have. Ensuring that any sort of net position or fund balance that is restricted is properly reported. And then lastly, what they've seen is not reporting a major fund when you should. And now obviously when you have those changes in major funds, ensuring that you're following the applicable guidance and showing the ghost columns and things like that. Next slide. So this is particular to net investment and capital assets, just a category of net position, but this has become such a big issue for the GFOA that I decided to give it its own slide. This one is just a bear. As most of you know who are filling out the GFOA checklist, there is now a calculation that you're having to submit, but they're still seeing issues with those calculations. So make sure that you are not including assets that don't belong to that particular reporting unit. Ensure that you're not including non-capital related liabilities. And then make sure that you are including unspent bond proceeds, your deferred inflows and outflows that are related to that financing. And lastly, make sure that you're including capital related IP and retainage payable. That is the liability that's related to your capital assets. So you want to make sure that that's in there. All right, the notes to the financial statements. This is one of those where I think that I see the most room for improvement. And so some of the common things that we're seeing are inconsistent pension and OPEB disclosures. Oh man, those the amortization of the deferred inflows and outflows for the upcoming year is hard to get, but make sure that that ties. We're seeing a lot on the budgets. If you have a legally adopted budget, you also need to disclose the legal level of control and then any violations of the budget as well. You want to ensure that you are reporting leases and subitas by major class. So if you look at your capital asset footnote, all of the different classes that you have of your capital assets, you want to break out the leases and subitas as the same way. So for example, if you have a building lease and a vehicle lease, instead of just showing leases, they need to be broken out as far as the categories are concerned. Make sure that you don't exclude the future payment schedule of lease receivables, particularly when they're material. And then finally, negative note disclosures. Danny mentioned it earlier. I think once things get into an ACFR, it's very hard for us to take things out of the ACFR. But if it does not apply anymore, you want to go ahead and pull it out. So things that we've seen are things like pollution remediation liability. Maybe the liability went away and is no longer there, but you're still disclosing a contingency related to it. Finally, on the supplementary information, like the RSI and the SI, your OPEB and pension schedules, just keep in mind that if you are a multi-employer plan, it's very possible that certain amounts, such as your covered payroll between the liability schedule and the contribution schedule, might be different. Additionally, the GFOA has noted a lot of missing note disclosures on the RSI, specifically related to changes in assumptions. I think this is because we're disclosing the current year changes in assumptions, so people forget it, but the RSI is a 10-year schedule, so you want to make sure that all of that has been disclosed. And finally, again, with the budgets, there's a theme here, but not having budget comparison schedules for all required funds. Keep in mind that the general fund is required, and then each special revenue fund that has a legally adopted annual budget. All right, in the statistical section, some of the big ones that we're seeing is in that debt capacity schedule, not including all of your debt. Your subitas and leases are considered debt, so ensure that that's included there. We're also seeing a lot of debt service as a percentage of non-capital expenditures being calculated incorrectly. You want to ensure that you're not including any bond issuance costs in the debt service expenditures. That should just be the principal and interest payments. And be sure to take the non-capital expenditures adjustment from the 34 reconciliation as opposed to the capital outlay line on the statement of revenues, expenditures, and changes in fund balance. At times, those numbers can be a bit different. And then overall challenges, just amounts not agreeing to each other throughout the report. So I gave that example of depreciation in a proprietary fund, but ensuring that they tie from the statements to all of the footnote disclosures. Using the correct terminology. So as we all know, it used to be the comprehensive annual financial report, and now it's the annual comprehensive financial report. Places where they're not seeing that updated happening is in references to the pension plans, for example, or OPEB plans if you have a separate plan. So make sure that you're updating that. Outdated terminology, so referencing GASB statement numbers that might have been superseded or might relate to another standard. And then finally, just complete omissions of required disclosure. So when preparing the financial statements, make sure that you're looking at the GFOA checklist so that everything that is applicable to your government is properly disclosed. And with that, I will kick it over to Danny to go over some modern ACFR solutions.
Thank you, Lauren. I'll go ahead and wrap us up. I mentioned at the beginning, I was going to be sharing some ideas on modern ACFR solutions. I'm going to give you three here really quickly. The first one is not as modern as the other two, but it helps and it works, and it'll get you through the fiscal year 25 while you have time for something else. And that is co-sourcing the ACFR writing process. It's a low-tech solution, right? You're working within what you have. Easier to stand up in a time crunch. Typically, you all or your auditors will have Excel and Word templates that you use to pull together the information. The one good thing about ACFRs is they do lend themselves to co-sourcing due to the aggregation of information. What that means is, note 5, 9, 10, 14, that information you all handle. Can you also do pension, OPEB, SPIDAs, and LISAs? We can do everything else, but those areas, the person that I had is gone, they retired. It's really putting on a strain for me to teach the next person up. I want to teach them. Maybe you can teach them as part of this process, but can we co-source it for the 1 year? So the ability, because it's such a big document of different pieces of financial reporting information, the ability to co-source it, if where you just need additional government accounting knowledge, that is a way to help you streamline the process that might help you in a time crunch. Secondly, look at your current ERP system and see if you have an act for writing module, financial reporting module. You usually should have one that might not be turned on. If you're in the process of getting an ERP, take a really strong look at that piece. Get someone that speaks governmental accounting. If it's not from the software company, a third party, or just yourselves, and ask those hard questions up front. And don't take the first answer. Make sure that they are giving you the right answer. It's a really good in terms of a long-term solution. Big upfront lift. It can be costly and time-consuming to stand up properly. You probably won't have it for fiscal year 25, but maybe for fiscal year 26, you could get that going. But look into that. That is a good option there. And then lastly, there are some standalone act for writing software. It's a great solution if you've already implemented ERP in the last 5-7 years, and it's just not in the budget or not in the timeline, or you just know your current people in charge of governance are not about to invest in something like that. It is technically cheaper than the ERP route. It does require the first year build with a software team, but not as big of a lead time process as ERP, meaning you could still probably do it if you're a June 30, although it would be close. But if you're a 9/30, you could probably still get this stood up. And you can still co-source the implementation. Like, yeah, I would love to stand up that new software, but I don't even have people to project manage that implementation. That's where people like us come in to help co-source it, pull in the TB, pull in the mapping, pull in the groupings. I mentioned the software firm that we work with. If you all have questions about pros and cons of the different ones that we've seen in the market, happy to share our thoughts there. But those are 3 ways. It's about time. If you're doing it Word and Excel, that one Excel document that's 30 tabs long that keeps breaking and freezing and that you have to open and can't work on until after lunch, those types of things, it's probably time for something else. We have 2 polling questions as we wrap up here. First, what does your organization use to prepare your financial statements? This is is it ERP reporting module, third-party software, Excel and Word, the auditors write it, or other? And Lauren, we got a question asking us how often our clients prepare the financial statements versus either themselves or somebody else. Do you have just a guess, a percentage of like, we do it, they hire someone, or they do it themselves?
I would say about 25% of the time we do it. About 25% of the time it's outsourced to someone else, and about half of the time the client is doing it utilizing some sort of third-party software.
Thank you. And let's get this polling question. Looks like a third of you all are Excel and Word. Hopefully it's either working efficiently, or I maybe encourage you to take that first step towards modernization. And about a quarter of you all using ERP and third-party software. 11% only with auditors writing it. If we did this presentation 10 years ago, I promise you that would have been 40-50% of auditors writing it. Us auditors, I used to be one, discovered that maybe that's not the best use of our time during the time that we're trying to get audits issued. And so that is it's surprising, but I'm glad that we're kind of down to that percentage. So congratulations to those of you all that are writing it yourselves. As we close out, as we do with every session, our last polling question to ensure you get CPE credit: would you like a team member to reach out to you after today's webinar? Yes, maybe in 1 or 3 months, or no. If you're going through an audit audit RFP, sometimes people put that in. Auditors are starting to price that separately at market rates. So you can consider having your auditor do it, but to keep in mind, they're probably doing it during their busiest time of year. The act for writing software company is a great solution. A firm like ours who only writes act for all year round is a good solution. But there are options out there. Perfect. Well, thank you all for your questions, your feedback, for your time and consideration for joining us over the last 2 days. We have one last session related to ERP implementations, challenges, resources. And so thank you again, and we will see you all in 10 minutes. Best of luck with your close this year.